Hi, everyone. Those of you that have dialed in, you're dialed into the Keeping Your Business Together in a Crisis series. This is part 4, which is alternative funding. And we're just going to wait a minute or so, and then we'll begin. Just to let you know, all of you are on mute. We will have a Q&A at the end of the presenters' conversations, and so you will be able to submit a request in our chat box. Please feel free to ask any questions. Jamie Brandis, my co-moderator, will be asking those questions to the panelists. We'll just wait one more minute, and then we'll get going. Maybe that you? That.
Probably me.
Slack. I'm like, I hear Slack. Okay. So for tomorrow, while we're waiting, just to let you know, we were doing part 5, which is unusual. We usually do webinars at 10 o'clock on Wednesdays. And tomorrow we have added a second webinar this week. It's commercial lease tactics and negotiation strategies with Mark Casey from Tenant Wisdom. So those of you that need to work on your lease or have some questions about how to negotiate with your landlord, that will be an awesome session tomorrow, which is April 23rd at 10 o'clock a.m. Feel free to dial in. So let's get started. Just to set the stage, I just want to let you know that we are the SBDC that supports Boulder County, and we also support a statewide tech source program that is for innovation and research companies. And we have other businesses that are not in Boulder County statewide that are joining us today. And so welcome, especially those of you in the rural areas. There are 15 SBDCs in the state of Colorado, 1,000 in the country. Our Colorado SBDCs work very closely together. We're sharing webinars. We work with the Office of Economic Development and International Trade to the Governor's Office. And so we're all pulling together to try to provide as much information to you as possible and support you. SBDCs do a few really cool things. We do consulting at no cost to you. Our particular SBDC has about 40 consultants that have come on board. They're all specialists, and everything from accountants to marketing professionals to leasing professionals and what have you. So we're all here for you. We also do workshops, and we are not charging for our workshops the month of April, maybe into May. We're not sure, but we do workshops, and then we do connections to resources. And the connections to resources are things like our panelists here that we're very excited to introduce you to Colorado Lending Source and Colorado Enterprise Fund, the Minority Business Office, the OEdit Office, World Trade Center. We are connected with a lot of different partners to help you, start your business, grow, and scale. So I would like to first of all thank the panelists because they are taking their time, and most of them have been on many calls trying to sort out these crazy times, and so I'm very, very grateful for all three to come on board and help us. One thing before I do intros, I did want to take a step back and thank our host, City of Boulder. They are the host of the Boulder County SBDC, and we work with them and other economic partners in the community to again help small businesses grow. So Mike O'Donnell is here with us. He is the Executive Director of Colorado Lending Source. Jason Jacksack is the business advisor, and he works for Colorado Enterprise Fund, and Ulysses Fernandez is program manager of the Minority Business Office, which is part of the Office of Economic Development and International Trade. And I'm going to turn the mic over to Mike to get started. There you go, Mike. Oh, Mike, I think you're on mute.
I promise not to drop the mic. Thank you. Excuse me. I just like to. This is the challenge of working in downtown Denver on my own. Good morning, everyone. Thank you for joining us today. Colorado Lending Source, we're a private nonprofit economic development organization. Do a lot with the Small Business Administration loan programs. Today, I'm primarily going to be talking about the Paycheck Protection Loan Program and a few other programs that exist out there that we may be involved in that probably gives you some access to some different resources. And I know that, Jason will be talking a bit about the EIDL, the disaster loan program, but we divided it up that I would talk paycheck and he would talk disaster, which is interesting. Paycheck protection loans is a really cool program from the Small Business Administration through the CARES Act. The Senate passed a version 2.0 of that act yesterday. We expect the House to approve that tomorrow, Thursday. The President to sign that back into law Thursday night, and the funds for the Paycheck Protection Program to return on Friday. So the program itself, if you're not familiar with, it's a program that was created to allow small businesses, independent contractors, self-employed individuals, people in the gig economy, also nonprofits that are 501c3, also veteran organizations, also tribal entities, to access a program where they could receive funding at a fairly low interest rate, 1%, over 2 years, 24 months, with no payments of principal and interest due in the first 6 months, and the ability to have most, if not all, of that loan forgiven by spending over the next 8 weeks after you receive the funds on payroll, rent, utilities, and interest on loans that you might have with your business. So the program has great intentions. It was originally given $349 billion under the first CARES Act. For banks under the second version, there are $250 billion. So we know that the first round didn't last very long, and unfortunately, independent contractors and self-employed people were pretty much excluded from that, as were a lot of people who didn't have relationships with banks who worked with the Small Business Administration. The big change under this new legislation is that they're setting aside $30 billion for just medium-sized banks and credit unions to use exclusively. And these are people who probably haven't worked with the SBA programs before, so they'll be able to make these loans. And there's also another $30 billion set aside for small business, small lenders like small credit unions and small banks, and even community development lending organizations like Colorado Lending Source or Colorado Enterprise Fund to make loans. So there are set-asides under this program to try and make sure that the biggest of the banks don't just sort of hog all the money and it goes really quickly. It's really intended to provide more equal access and probably more queues with more organizations than just larger queues with the big organizations. A few key points of the program for you to know about is that the way you actually determine how much you borrow under the program is you calculate your average monthly payroll for the last 12 months or for 2019. The average monthly payroll multiplied by 2.5 gives you how much you can borrow under this program. And then any funds you spend within the 8 weeks after that program, after you get your funding under that program, could potentially be forgiven as long as you spend those funds, which is all you can use the Paycheck Protection funds for, is to spend funds on payroll, all the related costs associated with that, including benefits, including insurance, including contributions to retirement plans, any state taxes you pay, not federal taxes, but state taxes. All of that can be counted in payroll, plus whatever you spend on rent that you had for leases in existence prior to the middle of February. The same with utilities, including things like your internet, and then things like interest on existing loans. The amount that you get forgiven will be a function of how many people you bring back or how many people you continue to employ based on that comparative period, either last year or earlier this year. And I'm simplifying the act in many, many respects, but I wanted to just jump onto the section that really a lot of people were missing out of. Here in Colorado, we have about 167,000 small businesses or businesses with employees. all but 2.5% of those are small as defined by the SBA. So all potentially, aside from a small percentage, could apply for this program. We also have more than 500,000 independent contractors or self-employed individuals. And while the Act has been fairly straightforward, if you have employees, you look at your payroll, you look at your W-2s, you count all of those benefits and stuff you've been giving your employees, and that gets counted to the number that you can average for the year and then multiply by 2.5. It's a fairly defined process. The SBA only just defined last week the process for a sole proprietor and independent contractor. And they've changed the tenure of the Act a little bit in the sense that as long as you're in business in the middle of February this year, you can apply as an independent contractor or a self-employed individual for a paycheck protection loan. But it's going to be based, if you don't have employees, on just line 31 of your Schedule C for 2019. So even if you haven't filed your 2019 tax returns, you'll have to prepare a Schedule C for 2019 to apply for a paycheck protection loan. And what it's going to do is look at that number on line 31, your net profit number, divide that by 12, and multiply that by 2.5, tells you how much you can borrow under the program. If that number is greater than 100,000, you have to reduce it to 100,000 to come up with that number. If you have employees as a sole proprietor, which many of them do, you can actually then add your W-2 wages and all the benefits and payroll you pay to that line 31 to actually then do the average number, divide by 12, multiply by 2.5. So I'm skating over a little this, but I wanted to let you know that there's a way now for sole proprietors and independent contractors to access the program. And given that it's likely that the program won't last for more than a couple more weeks if you're working with the large banks, it is more than likely the program will last for a lot longer if you're working with smaller institutions, be those banks, credit unions, or nonprofit lenders. And so the intent with this new Act is to try and make more funds available to the people who may not be at the top of the list for some of the big banks when they work through this program. So I wanted to mention that just really quickly in passing. The forgiveness factor for a sole proprietor, it's just going to be, if you're an individual, it's just going to be 850 seconds of what you show on line 31 of your Schedule C. So that's very defined. And if you're an employer and you've got employees, then if you had 10 employees prior to this crisis creating, and you end up with 7 employees through the 8-week period after you get the funds, then you'll basically be eligible for 75% of whatever it is that you spend for forgiveness. Any amount of the loan that's not forgiven just continues on, and again, 1% over 2 years is pretty attractive funding. So the Paycheck Protection Program is really an important tool. You'll never ever see anything like this before or again. Whether there'll be another CARES Act that continues funding for this program is a little doubtful, but it's possible, and we'll see if it comes back again. I wouldn't bet the farm on that though. And so if you can take advantage of the program, please do. And please either work with your local small lender if they weren't able to process a request in the past. Perhaps they will choose to participate this time because there's funding set aside to help them do that. And if you're working with a fairly large institution, try and find out where you are in the list and see how quickly that they can process their requests. Because once the door opens on Friday, and all of these loans start pouring in, again, we might get 10 days out of this next round from the big banks or the medium-sized banks, but you'll have a lot longer to work on the other. And I wanted to mention just a couple of other programs that might be useful for you to know about. Colorado Lending Source is a Kiva hub here in Colorado, and we help operate the Kiva program, K-I-V-A, and I'll have the information in the chat box for you to just sort of check up on us. Kiva is a crowd-funded or a crowd-sourced lending platform. Someone can apply for a Kiva loan. They go through a little bit of underwriting and review by the Kiva people who do this based out of their office in California. Once the loan is actually approved, and the loans can be up to $15,000 during this crisis. All the loans are 0% interest rate loans, and they're typically up to 36 months. I've actually seen a few that are 42 months. There's no payment or repayment of the principal for the first 6 months. But the way the program works is really cool in many respects. So you go through, you get approved by Kiva, you get put on a private platform where you have to find between 15 and 30 friends and families and supporters who would each be willing to make a $25 loan to you at 0% interest rate. And then once you go through that private raise, you get put onto the public platform where there are well over 1 million people looking to contribute funds to small businesses. Rachel, who's on this webinar, hopefully, who's our Kiva person and whose information I share, will shepherds people through the process and helps them get onto the platforms and do their raises. We have found that almost every business that we've taken from the private raise, which can be as quickly as a day if you can find your friends and family, to the public sector, you know, they're usually on there, even though it's a 30-day period, just like a Kickstarter or an Indiegogo. Most of the loans are fully funded within 24 to 48 hours. So if you're looking for additional source of funding at a 0% interest rate, a little bit of work at the front end to get you onto the platforms, but once you're on there, we find people like the Deutsche Bank Trust is really good at matching, you know, $2 for every $1 that someone raises. Many other organizations have Kiva lending groups who actually really look for opportunities to get on that platform. And if you look at how many Kiva projects are on the platform for the whole of the United States, there's hardly any because they all get funded almost straight away. So I encourage you to explore Kiva. And then from us as a nonprofit lender, we are working with as many communities as we can to help those communities to create loan programs to augment, supplement, complement what the feds are doing or not doing in many cases, because there are gaps with the Paycheck Protection Program. We also have a program we just rolled out this week for rural Colorado, who don't seem to be getting access to as many funds as the city communities are. So we have our emergency small business program for rural communities, just making $10,000 loans really affordable. Interest rate 3.75%, no payments for 6 months, sort of mimicking a little way the disaster loans that the SBA has. And so on our website, you can find a lot of that information. You can also find information about many of the other programs on the OEDIT, the Office of Economic Development International Trade website. And there are a lot of people out there really working hard to try and help you survive through this process, try and bring back or employ as many people as we can through this crisis till we get to the other end and we start to approach whatever we used to think was normal. So with that, I will defer to the team and back to over to Jason or however we transition, and I'll be available for questions at the end. So thank you for your time and attention today.
Thank you so much, Mike. Really appreciate it. Jason, if you want to, I'm not sure if you want to do your video or just stay on voice, but the mic is to you.
Thank you. If you're able to transition, if you're able to allow me to screen share, I'd like to point the audience to a couple of websites that I found very helpful to keep up to date with the information that Mike had shared. And I'm showing my screen right now, so this should be visible. Hopefully you can see the Treasury website at the moment. So I wanted to discuss a couple locations. I'm sorry, can you say again?
We're all good.
Very good. I wanted to just go into a little bit more detail and discuss a couple areas that Mike had mentioned. I work for Colorado Enterprise Fund as a business consultant, so I work on a daily basis with businesses that often have no employees, or only the couple that own the business are the only two people who work for the company. So I'll discuss a little bit of some of the topics that I've gone through in the last few weeks and flesh out a bit about other resources available through the state of Colorado, in addition to the federal programs. For the website that I am on, that I'm showing right now, this is the Treasury website. If you go to treasury.gov, click on for small businesses seeking direct release for COVID-19, this is where all the rules are. And depending on how detailed you'd like to get into the rules, I'd strongly encourage you to continue to come back to this website. So this has the overview of the Paycheck Protection Program, information for borrowers, lenders, and for the folks who are more of that analytical or accounting bent that are on the call, I'd strongly recommend that you read the program rules, specifically the interim financial rule 1 and interim final rule on additional eligibility criteria and requirements for certain pledges of loans. Got a lot of words to the name of that area, but the reason I recommend in particular the final link under program rules is that is the area where there are specific answers regarding the Schedule C that Mike had referenced and how we are required, how business owners are required to enter information into the Paycheck Protection Program. I'll discuss the economic injury disaster loan as well, but I wanted to point you to the source documents because this is incredibly complicated. I teach at University of Colorado, Denver, and unfortunately, I'm not able to see the expressions on everybody's faces who's listening to this call because I know after about 25 to 35 minutes of my lecturing, everybody zones out. That's the reason I'm sharing the link so that if you're able to come back to this recording, and it is the 22nd of April, as one of the folks on the webinar had suggested that be reiterated. Today is April 22nd, 10:20 a.m. And I'd recommend you come back to this website just to take a look at the rules as they change. In particular, the questions that I will scroll up to. The frequently asked questions, it was last updated 4/17. That's been updated 4 times that I'm aware of. More and more questions are added, and there's more elaboration on the specific elements of the Paycheck Protection Program. Getting into the economic injury disaster loan, the state of Colorado was declared an economic injury zone approximately March 16th. And what that did was it opened up a program that has been in existence for many years. Typically, it was used only for disaster zones, Hurricane Katrina, areas that were physically hit and injured. When it was opened up to the full state of Colorado, it made those loans available to small businesses and businesses that were impacted, some large businesses as well. As for the economic injury disaster loan, to quickly summarize for any who may not be that familiar with it, you apply for the economic injury disaster loan directly through the SBA's website. So no entity similar to Colorado Enterprise Fund or Colorado Lending Source touches the application at all. We cannot see it. And if there are questions about the status of it, what we were told by the SBA representative, Steve White, was to send an email to the SBA with your loan number and ask for the status of the EIDL. It's pronounced EIDL in SBA speak, so you may hear that come up as well. The EIDL, as opposed to the Paycheck Protection Program, is a much longer term program. The length is 30 years, and that's crucial because initially when the Paycheck Protection Program was initiated, Congress intended for it to be provided for a period of up to 10 years. When the administration discussed it and the Treasury Department announced the specific rules, they decided to shorten the length from 10 years that the loan would be paid back for the PPP down to 2 years. And my argument for a 2-year loan program, although there are no payments, principal, nor interest for the first 6 months, that's still 18 months for a business that's recovering from the biggest natural or the biggest economic disaster that any of us have faced in our lives, in the United States at least. That seems to be an extremely short time period. So I'm imagining some balloon payments that may come up to the extent that the dollars are not forgiven on the Paycheck Protection Program. One piece of advice for this website as well is for borrowers, there is a borrower application form, which I will open up right now. I'd strongly advise if your business has not filled this out yet, if you've not looked at this yet, take a look at the form. Colorado Enterprise Fund is not accepting applications, as nobody in the country is accepting applications because the program is temporarily on hiatus pending the passing of the additional bill that will provide additional funds for the program. So although we're not processing applications, we're accepting applications from our current borrowers, and we may be accepting applications from other small businesses as well. That's not formally been announced. It's likely to occur within the next few weeks, but we'll put out a formal announcement once we make that determination. The reason I mention this is it's for average monthly payroll, it can get complicated. The direction on this, and a question that I fielded the other day was, the question from the business owner was, I have my Schedule C from 2018. I do not have it from 2019. I cannot get through to my accountant. What shall I do? The response, as per the guidance, was, you are required to use your 2019 Schedule C, even if you've not filed it yet, period. So there's really no out for any business owner just because they haven't filed the 2019 Schedule C. And it's similar in the next topic that I will discuss, which is unemployment for the state of Colorado as of this past Monday, which was the 20th. Wow, only 2 days ago. As of the 20th, state of Colorado has changed their unemployment system such that they are now able to process unemployment claims for folks who are not typically eligible for unemployment benefits. And that includes gig workers, that includes business owners, folks who are 1099, and the state is now processing these pandemic unemployment assistance claims. It's a different program from the other parts, and this is, I'll get into a couple questions that I was asked yesterday on a different speaking event. It's the general concept is if you're eligible for unemployment insurance in general, then you will have the amount that you are being paid increase by $600 per week, and that will go into effect. It will go into effect from the end of March, effective as late as the end of March through the end of July. $600 extra if you've been impacted by COVID-19. So the thinking on this is, and I've had some questions from current business owners on strategy of what they should do with regard to, should I continue to pay my employees even though I don't really have the resources to do that? A number of business owners are putting their personal resources into the business. And my discussion point and advice on that was, if you are running short on funding overall and you're able to lay off your employees because you don't have work for them, your business is closed completely, and really for the business I'm thinking of, there was no actual work the employee was able to physically do because the business was shut down. My advice was, in that instance, was to lay off the employees because there's no work and the business owner couldn't reasonably and realistically afford to continue to pay the employees, and let the employee claim unemployment insurance, because then they would receive the amount they qualify for plus the extra $600 a week, which would hugely top up their earnings. And for the pandemic unemployment assistance, which is the technical term for it, if you Google that term, you'll pull up the application. There's a different application. There's a different website on the, let's see, actually I will go to this. If you Google Pandemic Unemployment Assistance Colorado, which is what I'm Googling right now, you will go to file a pandemic unemployment assistance claim. What this will request, and I won't go too deeply into this, but I do want to show you just for the first couple screens how to get to this, because there were a number of questions yesterday on a call on that. But Google Financial Pandemic Unemployment Assistance Colorado, you'll go to the website. That will bring you up to the website colorado.gov/specific/CDLE/COVID-19/PUA for pandemic unemployment assistance. Scrolling down on that page, it will ask you a series of questions, file a pandemic unemployment assistance claim. And this, I've gone through this process just with one of the business, or with my wife's business activity. I've gone through and looked at and entered the information on this system. And one thing that I wanted to advise that's a little bit, it's different from what one would expect, is if you log into the system, it will ask you 4 or 5 questions initially. And one of the questions is, are you unemployed? And if you state, no, I am not unemployed, because you're partially employed because you're a business owner, although your hours have been reduced and cut back and you have a fraction of the revenue, if you enter no, the system at the moment will state, then you are not eligible for pandemic unemployment assistance. That's not technically correct, both in the federal law, and I've reviewed Department of Labor. I can point anyone interested in the website. For Department of Labor, they've issued guidance that states that if your employment has been impacted and you are partially unemployed, then you are eligible for pandemic unemployment assistance. The state of Colorado website at the moment makes it appear something different. So the only way to process through the system is for the question that says, are you unemployed? The way I would read that is to instead to think of it as, are you at least partially unemployed, and has your revenue decreased because of COVID-19? And if you look at it that way and say, yes, because I'm a business owner who owns a restaurant that's mostly shut down, then you can process through the system. Later on in the system, and I'm explaining this in a little more detail because it was announced last Thursday or Friday, and only became available as of Monday of this week. So I'm discussing a little bit more detail on this. Some of the information that you will be required to provide will be tax documents, and either your 2019 or 2018 information can be used to upload to provide verification and confirmation that your business was in existence in February 15th and that you filed taxes as a business entity. And my understanding, it appears that the website is going to require that you have some net income, which makes it a bit more complicated for any businesses that are newer. And one other point that came up in a conversation a few days ago, I wanted to discuss a little bit more, was a business owner had discussed with me that he had made some major improvements in his business. He'd moved to a new location. He had substantial TI or tenant improvement expenses. And because of that, for 2019 as a whole, he was claiming these deductions under Section 179. And under that section of the tax code, one can claim as an expense the full amount that has been paid rather than depreciating it. Under depreciation, one would claim as an expense the value of the asset that's purchased or tenant improvements over a number of years. Instead, what he has the option of doing is claiming the full expense under one calendar year of 2019. The benefit typically is that current taxable income will be massively decreased. In this case, what it did is it actually knocked him into the red, such that his business, after taking the 179 deduction, was negative. He had negative net income at the end of the year on Schedule C. My advice to him was to consider that he didn't need to file he did not need to take the benefit of Section 179, but could instead depreciate the items that had been purchased under tenant improvements and the other expenses that his accountant had recommended be expensed in the current fiscal year, that he redo the Schedule C such that the expenses would be depreciated out over the IRS allowable number of years, which I believe for tenant, I won't quote the number of years, but that is stated under the IRS code as to the number of years that different assets, the useful life of different assets for depreciation purposes. So that is something that I advise him to do. And may I ask, I'll actually bounce this back to the moderators for the moment. I don't want to go too far past my time, and I wasn't sure for the other areas to be covered. So I will return the mic to the moderators for now.
Thank you so much, Jason. Ulysses, would you like to talk a little bit about what's going on at MBO and share a little bit about what you've been experiencing in these last month or more?
Yeah, thank you, Susie. So as Susie mentioned, my name is Ulysses Fernandez, and I'm the program manager with the Colorado Minority Business Office. Really, the mission of the Colorado Minority Business Office is to support minority women and veteran-owned businesses to pursue getting certified as such a business and then going after government contracting opportunities. In addition to that, though, we really do see ourselves as a resource statewide, as a connector to the many partners that we work with, such as the Colorado SBDC and the Boulder SBDC, which is why I'm thankful for being here today. And our office, the Minority Business Office, is part of a larger office, which is the Office of Economic Development and International Trade, or OEDIT for short. And there are also a number of divisions within that office that can really support businesses and especially support businesses through a time like what we are facing right now. So over the last month and a half or so, really what we've dedicated ourselves at OEDIT and in collaboration with the SBDC has been to become a central hub for information, not only what we are seeing coming down from the federal government, but then the types of initiatives that we need to develop here at the state in order to support small businesses. Jason did a great job right now, I think, in talking about those. And then the last piece, or what I will be sharing with you all today, is then what happens at the local level and what type of resources are going to be available for you maybe in your county or in your city. And those for us are a little bit harder to find just because the state is so big, and some of those are coming from smaller organizations, but we have really tried to do our best in gathering those, and I know that the team at the Boulder SBDC has been working on some of those same efforts. So the first resource that I would like to share with you really is the OEDIT website, which is, or the Office of Economic Development and International Trade's website, which is choosecolorado.com/COVID-19. Again, that's choosecolorado.com/COVID-19. And what you will find on this website, it's a number of different approaches, I guess, or opportunities for you to really see how it is that you can help support your business. Some of this includes a general summary on the Paycheck Protection Program that Mike was talking about, or the EIDL loan that Jason also spoke about, But there's also 2 other programs on there that are related to the federal government resources that are out right now. But if you go further down on the website, you'll also see information on eviction assistance, layoff assistance, trade and travel advisories, industry-specific resources such as for tourism, arts, film and media. Again, there's a number of offices within OEDIT that do work on each of these industries that might be able to help you and be a resource to you. So I do encourage you all to visit this website, get informed. I think the biggest piece of advice that I could have for any business owner, and myself having been a business owner, is the more information that you have during this time, the better, because it's going to allow you to make a more educated decision about what resources could be useful to you, or which would be like a hierarchy on how you can place those. So another thing that's on that website, again, the choosecolorado.com/COVID-19, is a link that says alternative sources of funding. If you go to that and you click on it, what that's going to open up is actually an Excel or a Google spreadsheet with a list of different types of resources, in addition to the federal funds that were already mentioned during this call. This list is really, really important, and it's updated all the time. So I believe that as of Friday, there was about 92 resources on here. As of right now, there's over 150 on there. So again, this is continuously being updated just based on what the communities around the state of Colorado or nationally are sharing with us. And the type of information that you're going to find on this spreadsheet, it's going to be a little bit different. So you might be looking at deferrals for your business. There could be deferrals of payments for, let's say, a mortgage if you own the building. There could be deferrals of other payments with some of your lenders. There's going to be deferrals on property tax or sales tax. And these are each going to be determined individually by that lender that you have, or by the county, or by the city, if there is going to be any referral. But just in going to look on here, I think it will give you an idea of what those look like. And the next step would really be to then contact your city and or your county to find out whether you can apply for those and what that process will look like. In addition to the deferrals, there's also grants. So not every resource that is out there is a loan. There are also some grants, but the grants are obviously going to be very competitive. So the sooner that you can look into applying to these and gather all the documentation that you will need, the better. Again, there's a list of several grants on there, probably 20 or 30 that you may qualify for. So I would recommend visiting with those, reading the description, and then contacting those entities if you think that they will fit you. The third piece is going to be lines of credit. So there's also entities or organizations that are trying to help businesses by providing lines of credit. And then the final, the fourth piece that is going to be on this Google spreadsheet, it's going to be loans. So loans, in addition to what Mike and Jason already mentioned, there's going to be others on here. This might include even the Kiva loan, actually, that Mike was talking about earlier, but then other programs that might be industry specific. For example, I know that ag is a big challenge with some of the resources that have currently been rolled out, but you might find something on here that will fit your business. And then some of the other things that we've seen with the loans that are out there or that are on this list is that they are being developed by foundations or community organizations that are really looking to work with the business, to support the businesses long-term by deferring payments, first of all, for 6 months, and then really working with them on low interest rates. So again, I think that the most important thing that I can really communicate with everybody is get informed, reach out to the federal, or look for information on the federal programs, the state programs, and then also on your local programs, and connect with those offices. Call the Boulder SBDC or your local SBDC if you're not in Boulder County, and talk to them, see how it is that they can help you. Boulder, I know that Boulder SBDC, as well as the Minority Business Office, we have consultants that are able to help discuss the different opportunities that might be available for your business, and we can also help you fill out some of those applications. So I will say that we have 2 consultants on our staff, at the Minority Business Office that do speak Spanish. So if you know of somebody that needs that specific resource, please feel free to refer them to us, or even through contacting the Boulder SBDC. We do collaborate with them on a lot of projects, and they would be happy to help you get in touch with us as well. So I know that was kind of fast, but again, it's just a lot of information, and I think what we need to do is just really invest ourselves in finding what fits our business. So the last thing that I will say is that the state does have a COVID-19 Small Business Navigator hotline that is open Monday through Friday, 8 a.m. to 5 p.m. If anybody has any questions about the new programs that are being rolled out or anything at the state level that we can help you there, that number for the hotline is 303-860-5881. Again, that's 303-860-5881. And Monday through Friday, 8 to 5, we would be happy to take your call and see how it is that we can help support everybody. I think that's kind of all I have, Susie.
Thank you, Ulysses. That was great. So, and I don't think that was too fast. I think that what you and Mike and Jason said, it's all great information. And, again, as things change every day, I think that it's important to show that, there are different options and resources that people can reach out to. I wanted to mention before we open up to Q&A, and again, since this is, April 22nd at now 10:41, these are some grants that might be of interest to you. They could be on the list that we'll share that Ulysses mentioned that's on the state site, or we have another list that we'll be sharing that the Boulder, our Boulder team put together. And so we'll update that and make sure that this is all fresh. But I'm just going to throw these out because a lot of people that call in do look for grants. I hear it all the time that, people are like, I don't want to take out a loan. And so that's why I think the forgiveness piece is so, it's such a big deal for people to try to grab that money. But while you're waiting for those applications to be processed, or when you're waiting in line to, try to get, some sort of relief, you can also do these, you can also look at these options. So Verizon, they had a first round of funding, but they're opening up another round of funding. So grants up to $10,000. And it just says mid-April on their site. And there'll be a link for that we'll share when we follow up with this recorded webinar in our email. So Verizon, I would look and see, again, up to $10,000 to help support businesses. Red Backpack Fund from Spanx is doing women-owned businesses, $5,000 grant. And May 4th is when the applications are due. So again, $5,000 from the Red Backpack Fund. The Council of Fashion Designers is offering grants up to $100,000, and that is a May 2nd deadline. So for designers, I thought that was super cool. So that's the Council of Fashion Designers. And then for our hairdressers, who I desperately miss and need, there are $1,000 grants for them. So for beauty professionals, not just the hairdresser that I need, but also the nail people that I need, and other items that I won't get into. Hello Alice has $10,000 grant, and so that's a really cool program. So $10,000 grants from Hello Alice, and I think they might be tied in. Jamie, I don't know if you know this, to the Business for All organization. Again, we'll send out the links. I just want to kind of push some things that were top of mind. National Association for the Self-Employed is offering $4,000 loans and $4,000 grants. I think you need to become a member, but $4,000. Facebook is doing things in waves by state, and so it looks like after April 22nd, there could be some opportunity for some funds from Facebook. Eileen Fisher is offering women-owned businesses grants up to $10,000. Again, just like Ulysses said, it's competitive, but can't hurt to try and look at some of these things. The U.S. Chamber of Commerce Foundation has a Save Small Business Fund. So April 20th, for businesses that are 3 to 20 people, there are $5,000 grant opportunities there. And those are the ones that I pulled out. I also want to mention for our businesses that are doing innovation and research, there's some opportunities for SBIR grant money, and Jamie is our program manager for that program. And I don't know, Jamie, if you want to maybe hop on and mention anything with that. I'm kind of catching you off guard, but I just wanted to kind of drop a few little nuggets of hope of, hey, maybe you didn't know about some of these other opportunities, and maybe you could work on trying to get some
maybe I can share a couple with you, Susie, that are on this
yeah.
list. So I know that in Boulder, for example, there's a lot of companies that are involved in technology, and some of the grants that are available on here are, for example, the New Media Ventures 2020. There is one through the Sony Creative Funding, and that is for tech and advanced industries. The deadline for the first one I mentioned is May 4th. The Sony one does not have a deadline on it yet. There is Bartender Emergency Assistance Program. That is also a grant. I saw the Colorado Restaurant Association COVID-19 Angel Relief Fund, which is also a grant for the tourism and hospitality industry. And then there's also grants that are being created through, for example, the Colorado Creative Industries, which is housed at OEDIT for those involved in the arts. I believe that opened up last week, and it should stay open for 2 to 4 weeks. I don't remember exactly, but to find out information on that specific grant, it can either be on this list or on that Choose Colorado website under Colorado Creative Industries. So yeah, I mean, I think that there is a lot of programs out there. Again, it's just how do we disseminate through everything that is there to find what fits us.
Yeah, I love it. I think thanks, Ulysses, for that. And I know that other organizations like Downtown Boulder Partnership, they have some funds for, and I think it might be for restaurant workers or something like that. So there's little pockets of money and support and help in different places. But I think everybody's so bombarded with all these websites, and it's like, where do you go? And it just gets to be a little bit almost like overwhelming. So thank you for bringing those up. And Jamie, did you want to? I'm going to turn things over to you because I think you might have some things to say.
Sure. Trying to keep up with questions and listen at the same time. So that's always interesting. But you did mention the tech program. So I just wanted to go briefly over what that is. So it's called TechSource. It's a statewide program, totally free of charge, like anything that we offer through the SBDC. And it's specifically targeted towards technology companies that are women-owned, minority-owned, disadvantaged, those types of things. In rural communities is a big part of it. And we do help with small business innovation research grants. So these are grants you can get through the federal government. There are 13 agencies that participate in it. And again, they are grants. So a lot of it is to fund research and development. So if you have an innovative idea, solution, those types of things, there are opportunities there. And I do know that the government right now is sending out requests for proposals for all sorts of things related to COVID. So if you do have some kind of technical solution or are making masks or, a lot of those things that are trying to combat the virus, there are opportunities there. HHS is a big one that's looking into things. So there's things out there. DOD has a lot of funding. So, there's some opportunities that you might not even think of that are available through the government for some funding there. So something a lot of people don't know about, but some things that we're happy to help navigate with. We do have some assistants that can help look for opportunities because the whole system of looking through it can be very complicated. So we do have specialists that can help with that process, and then also help advise on proposal writing for those grants to the government. So that's just a little bit about the tech program, but I'm happy to talk more about it I'm that first point of contact for anyone interested. So again, happy to talk to anyone about some opportunities there. So do we want to get started on questions at this point? Okay,
Let's do it.
Yeah, so I'm going to try to get in some of these later ones too, but I'll start with some of the earlier ones just to make sure we can cover some of these. And some of these will be for Mike, some for Jason, and then Ulysses, we have some for you too. So Mike, we were wondering if you could talk a little bit about the Main Street Loan Program. Do you have information about that you could share?
We actually have something we call a Colorado Main Street Loan Program, but I think you're asking about some information that's come out from Treasury. They're calling the Main Street Program, which allows a Treasury to actually go into banks and buy 95% of a loan that a bank might have with a small business, a Main Street business. The program is only available to FDIC insured lenders. We're really not quite sure how the details will actually roll out of that, but it's a buyback arrangement. The Treasury also has a paycheck protection program buyback to actually buy paycheck protection loans that banks do to again reseed funding to the banks so that they can make more of those loans, assuming they can get it in the window. So it's essentially just a way to provide a little bit more liquidity to the banking system, at least as I understand it, that would allow banks to perhaps make more loans to small businesses, you know, if they choose to do that. And that's my understanding of the Treasury Main Street program. Our Colorado Main Street program has gone on to like an emergency status, so we're just trying to get as many loans, smaller loans out to as many people as we can at very affordable rates so that they can hopefully survive. So I'm not sure if I did a good job answering that, but that's my take on that.
Sure. So I know you were talking about the federal level. Is there more you can talk about through CLS, or you mentioned that there was more local too?
A little bit, yeah. We've been running a Colorado Main Street program, also known as the Colorado Microloan Program, and we've also run a few place-based versions of that. So we're essentially redeploying all of the funds we can on an emergency basis at relatively affordable, attractive interest rates. And again, no one, as I think Susie mentioned, no one really needs extra debt at the present time. So if you can get debt, you know, don't pay very much, if anything, for it. And so that's why Kiva is attractive, because it's a 0% interest rate loan. You know, and I have my $25 Kiva loan and I get my 69-cent repayment every month, and it's really exciting. And once I get back to $25, I can make another loan. It's fun for me. But from our perspective, we've just rolled out our emergency rural Main Street program, which is really trying to help the people in communities who don't have access to great infrastructures like you have in Boulder or other communities have. Many of them are far-flung, just to provide a $10,000 loan, you know, fairly easy to get, you know, a cross between a paycheck loan and a EIDL loan, just to make it relatively easy just to get funding to hopefully get to the other end of this. But there are many, many programs that are like that. And we are a resource, and we can share our information about our COVID page so you can see those as well. But the OEdit page is probably the best one that I've seen in terms of collecting all of those resources together.
Great. Okay. Jason, could you talk a little bit more about programs at CEF and if there's anything for COVID specifically, or if you've expanded any of the lending programs specifically due to COVID?
Certainly. So for Colorado Enterprise Fund, we have been working with a number of counties and cities to develop a new loan product that at the moment is our primary loan product. We're scaling back on our typical lending program. Typically, we lend to business owners. The interest rates might be 10 or 12% because we lend to business owners that are toward the higher risk category. What we've shifted to now is working on this new loan program. It's available on a county and city by city basis. We have an agreement in place with Brighton, one with Arvada. We're working on one with Adams County. Typically, the cities or the counties are providing the details. They're rolling this out as their program because the cities and counties are providing funding that allows Colorado Enterprise Fund to make these loans available. The general terms of the loans will be up to $25,000. Underwriting will be completed on average, and the loan dispersed in 2 to 3 weeks. And the interest rate will be 5% or less. Typically 3 to 5% is the interest rate. So that, other than the federal programs, we're starting to process PPP loans. I mentioned earlier that the EIDL loans are processed directly through the SBA, so we have no involvement in that. But we are starting to process PPP loans. We've processed the first one for a business owner. Business was a tech firm in Boulder that was processed. The closing, I believe, went through about a day or two ago, so we're just dipping our toes in the water, but we do anticipate scaling up rapidly once funds become available again. So those from Colorado Enterprise Fund, those are the primary products that we are making available. On the SBA side, we process community advantage loans and microloans. So those are other options, but those tend to be a bit more time intensive. And again, those are more on the lending side. One thing I did want to mention, had not come up earlier, but I wanted to mention this as one way to work with the existing federal loan products that exist, is if you do not qualify for the PPP loan, there is on the application for the PPP loan, you'll see that for calculating the amount of the loan, you would typically take 2.5 times the monthly average salary and add the outstanding EIDL loan amount. And one of the minutia fine points of that is for the EIDL loan, you are able to roll it into the PPP loan, but you are not required to unless you use the EIDL loan to pay for payroll. In that case, the SBA does require, the SBA Treasury do require you to roll the EIDL loan into the PPP loan. But on the benefit side, if you have an outstanding EIDL loan, you can apply for the PPP, and even if you do not have payroll, there's nothing on the application form that states that it will not be processed as a PPP loan if you roll the EIDL amount into the PPP amount and then potentially have it forgiven, because you may have some future payroll and rent expense that can be forgiven, starting with expenses made on the date of funds being dispersed.
Awesome. Okay, Ulysses, question for you. Do you know of funding resources for underserved communities in Colorado, like minority, women, veteran, rural, those types of things in particular?
Yes. So there isn't a lot of information or programs that have been developed yet. However, we have received, for example, through one lender, they're called Green Line Ventures, and it's called the Green Line Emergency Microloan Program. They are a program that has loans with an interest rate of 2%, and the payments on these are deferred for up to 6 months. Outside of business resources, there's only a couple of these types of programs that are available, and those would be on that list that I spoke about earlier that is on the OEDIT website. But in addition to that, one of the other things that our office has done in collaboration with some of our other partners has been to gather resources for immigrant, refugee, or just minority populations. This could be the case for them looking even for food or to help with paying rent. And a lot of times, the organizations that are developing these types of programs are going to be smaller nonprofit organizations and where they're reaching out to get these types of services. So I can also forward you, Jamie, some of this information so that when you send everything out to the listeners, and they can see that on there as well.
Great. Okay, so I think people are still a little confused on PPP and the new one, so the new version of it. So they're wondering, it's basically about contractors, self-employed, so if they can add that into their salary calculation.
And the answer is no. If you're an employer, 1099 people, independent contractors aren't employees, so you cannot include that in your calculation of payroll for the purpose of doing that. But on the other end, if you are someone who issues a K-1, if you're a partner in your entity, that K-1 that you file on your personal tax return can be added back in to the payroll for the company. And again, you look at your total payroll over a 12-month period, either 2019 or March of last year through to February of this year, whichever period makes more sense for you and gives you the larger number. And then you divide that by 12. You'll subtract anyone who makes earns more than $100,000 from that number, and you'll remove anyone from those numbers that doesn't have a place of residence here in the United States. And then you'll add in all your benefits and your retirement and your insurance and all of that sort of stuff and your state taxes, but not your federal taxes. To come up with a total payroll number, you divide by 12 and multiply by 2.5. 1099s are self-employed individuals. and they can file for a paycheck protection loan in their own right. For you to maximize forgiveness as an employer claiming for a paycheck protection loan, it's all based on the number of full-time equivalent employees you have, either through that 8-week period immediately after receiving the funds or on June 30th. You've got 2 bites of the cherry there, compared to how many full-time equivalent employees you had at whatever period you used before. And so the objective there is obviously to get to 100% forgiveness. You're borrowing 2.5 times your average monthly payroll. You have 8 weeks, almost 2 months to actually spend that. So the Act allows you to, in addition, making payroll payments, to also make payments for rent, utilities, and for interest on either existing mortgages or notes that your bank has, that you might have with a lender. So the objective there is you've got 2 months or so worth of payroll plus a bunch of other opportunities to maximize your forgiveness. If you're a sole proprietor, you don't have a lot of wiggle room there, other than the fact that you have your Schedule C from 2019, whether you've filed it or not is really the basis for that. So it's actually made it a little harder for sole proprietors and independent contractors to actually access a program, which is different from what the Act intended. And that's why it's really important that other programs, be they local or Colorado Enterprise Fund or Colorado Lending Source, to augment or supplement or provide funding in the absence of the Paycheck Protection Program. But again, the big plus about this new version of the Act, it really didn't change any of the rules. What it did is it took some funds away from the biggest banks who have the capacity to process these really quickly and have hogged most of the funds this first time round, and given some of those funds to the smaller lenders, be they banks or credit unions or non-profit lenders, so allowing them to provide access to the groups who can't access the program because they don't have existing relationships with the banks who are doing them now. So essentially, it's just providing broader access. It doesn't mean that more people will actually get them. It just means that the access will be a little broader, and perhaps we can help more nonprofits and independent contractors and self-employed individuals, because it's much more attractive for the banks to do the bigger loans with their existing clients than it is to help someone who doesn't have a relationship with them.
Okay, so this is kind of along the same lines, but this person applied for the PPP loan through Bank of America on the first day that they opened the applications, but they kept getting the runaround and do not feel confident about getting the loan from them. So if they switch all of their business banking over to a smaller bank and reapply, will that put them at the end of the line, and is it even worth trying to apply at this late stage?
Let me be political here and say that there's already been 2 class action suits filed against the Bank of America related to the handling of the Paycheck Protection Program. If you work with, you can only get 1 paycheck protection loan at a time. You wouldn't have to move all of your relationships to a different bank or a different nonprofit lender. We nonprofit lenders don't have relationships, so we can work with people if we have funds to lend. So it's really there's no queue at the moment. There are no loans queued up in the SBA system. The SBA shut their system down at 7:58 last Thursday. There are no loans pending at the SBA. So if there is a queue, it's within the bank. And if you got in on the first day, I would hope you would be at the very top of the queue at Bank of America, because they processed tens of thousands of these requests within the first week. And that would be a question to see if what Bank of America started to do initially is they'd only make loans to people who owed them money, which is why they've got these class action suits. So they sort of abuse the program in certain respects at the front, perfectly legal, but just not very ethical. And so if you've got a relationship with the bank, you should always stay with that bank, but you should also ask them where your loan is in their queue and how quickly they can process the queue. Because again, when I just saw an email that the money might be available on Thursday night. So if the bank doesn't have people with getting ready to enter the information into the SBA system as soon as the doors are open, they'll probably be at the back of the queue, but it just depends on how that bank is prioritizing their existing customers. So I would think as an existing customer of the bank, you should be well at the top, especially if you got in on the first day. And I would be very upset on your behalf if you weren't.
Okay. So there is a question about people with ITIN. So can they apply for EIDL and PPP? What does that look like?
PPP, again, you have to have a Schedule C if you're a sole proprietor, if you're only employers can otherwise apply. The disaster loans, the EIDL program is credit scored, Paycheck Protection isn't. You are required to prove out citizenship with the disaster loan. You're not required to do that for the Paycheck Protection program. It just requires that your place of residence is within the United States. There's no citizenship requirement with the Paycheck Protection program. And Jason might add something.
Yeah, go ahead. Okay. So there's a question about unemployment. So Jason, you had mentioned that, there was a question about, are you unemployed? So if someone answered no to that question, are they able to go back and change their answer? Are you aware of how that works?
Yes, thanks. Good question. Yes, you can just go back in and change your answer. And then if you do that, it will let you process through the system. One other thing to share, for probably most of the audience has not gone through that the website yet, is that there is a validation process that is based on credit information. And it seems, I believe it was Experian or one of the major credit reporting entities that the state of Colorado Unemployment Office has partnered with. So you will be asked about 3 or 4 questions to verify you are who you say you are. I didn't have most luck with that. One of the questions was, in 2015, you took out a car loan with which of these 4 companies? And since 2015, I think my wife and I have purchased about 6 cars, refinanced most of them a couple of times. I have no idea. So I failed that test. Upon failing the test, the unemployment office allows one to upload a document that confirms your identity. And one of the documents was driver's license, another was passport, another was social security card. So you are able to upload the document even if you've failed the test, which is kind of embarrassing for a finance professor to fail a finance test. Yeah, but so yes, you are able to change it.
Awesome. So this person, again, with unemployment, they're saying they may need to furlough or lay off one of their employees, but they have every intention of bringing them back on. So they're wondering if they should file for unemployment and if that means that they have to look for employment somewhere else. So basically they want to keep their employee on, but might need to furlough them now.
Thank you. That's a good. I'll answer part of the question. The other part of that research, I can take up. Actually, I can take up an answer in a few moments. So the technical term for that would be furloughing. When I worked for a Fortune 500 manufacturing firm in one of the truck plants in Ohio, it was a regular process for truck workers to be laid off because there wasn't enough demand. Then they'd be called back a couple months later, and during the time, each employee would be on unemployment. So that's a typical, regularly done process to lay off employees. It's not fortunate. It's not easy for anybody, but there's quite a bit of a cushion with that additional $600 payment. So my advice for the business owner that's considering doing that for financial reasons, to keep the operation viable long-term, can't reasonably afford to pay employees who are not working, would be to provide written notice to the employee that they are being laid off because of COVID-19, because there's not enough work. Then the employee would be able to apply for state of Colorado unemployment insurance during the time when there's not work. And then if the company is eligible for PPP, the company should bring the employees back at that point. It's not required, but if you don't staff up to the same FTE, as Mike had mentioned, as during one of the 2 look-back periods, which are February 15, 2019 through June 30, 2019, or January 1st, 2020 to February 29th, 2020 at the business owner's discretion. If you don't have the same FTE as that time period, the forgiven portion will be reduced. So again, getting back to the primary question, for the business owner, in that instance, you are able to lay off the employee. The employee has been furloughed. I'd have to research the question of if the employee is required to look for other work during that time. So that I'm not certain of. But yes, the employee can be brought back when there is work again, and that's the intent of the payroll protection program, to allow business owners to do that, to have the financial resources to bring the employees back.
Okay, and then I guess from my understanding too, that's what I've learned from unemployment stuff, is that they have made it more lenient so that you don't have to be looking for employment as significantly as the requirements were previously. So hopefully that helps too for people being able to keep their employees on. So this person is also asking if they were approved for unemployment already, but they're not receiving the extra $600 yet. What should they do? I guess my understanding with that is that if they're already in the system, they don't need to reapply to get the $600. But Jason, if you've heard something else, please say that.
That's correct, and that's what it states in the state of Colorado unemployment insurance website. I believe the retroactive date was March 27th, 2019, that individuals who are receiving unemployment insurance now will receive that $600 the supplemental amount retroactive to March 27th. What the state website says, it's a little confusing. I'll expand my answer to cover the pandemic unemployment assistance also. What the state of Colorado website says at this moment is if you're filing for pandemic unemployment insurance, which falls under a different category from those who've already applied for regular unemployment insurance. So this only applies to the pandemic unemployment insurance group, that those individuals can apply retroactive back to the date when they were injured, when their company was injured by COVID-19, retroactive as far back as February 2nd, 2020. So that's quite a bit further back to receive the $600 additional amount. And the way I would look at that would be look at your weekly revenues in 2019 versus weekly revenues in 2020, and that'll give a pretty clear picture as to when you were impacted.
Okay. So there's a question about if you're a nonprofit executive director or own the nonprofit, are there any grants or opportunities out there for these types of businesses?
If you're a 501c3, you could technically apply for the Paycheck Protection Program, but I've not heard of any specific grants, at least from my perspective. Perhaps through your programs there might be some.
No, I'm not, Jason with Colorado Enterprise Fund. I'm not familiar with grants, but for the EIDL loan, the interest rate is lower. For not-for-profits, it decreases down to 2.75%. But I believe that is only, I know for PPP, there are only certain entities that are included. 501c3s are included. The other 501c categories are not included in general in the PPP. So if you're a 501c, I forget the other numbers, but there's quite a few other categories of not-for-profits that are, such as unions, religious organizations that are not 501c3, those are not eligible.
Okay, then there's also a question for people that are commercial property owners. So they're wondering if there's anything other than EIDL for those types of businesses.
Again, if you've got tenants who are businesses, if you're a commercial property owner, you would have tenants. So the businesses themselves can apply for the Paycheck Protection Program to help them make rent payments to you. That's probably the best, is trying to help that. There aren't any programs that I've specifically heard from a federal perspective. I know there was some talk here in Colorado about trying to create some relief around rent payments and landlords' mortgage payments, but that hasn't happened. I think the education to your clients to help them get the funding to actually get a forgivable loan to make the rent payment to you is probably a really good way to go if you can encourage them to explore that opportunity, assuming they can get in quickly.
And I received just to add to that, I received an email the other day I'm searching for right now from JLL, or Jones Lang LaSalle. They're doing a presentation, I believe in a week or so, on how to face the new landscape. And they're part of the spiel for this presentation was that everything has changed forever in our world, in the world of commercial real estate, which makes sense considering how many business owners are not financially able to pay more than 1 or 2 months rent. So I will ask if anybody else is able to pull up that email or was on that mailing list. If you could please add that to the chat feature. I'm digging for it right now, but there may be some new ideas that you'll gain from that discussion.
I'm also not seeing anything specific to commercial real estate, but what is on that spreadsheet that I've been talking about is that there are some grant programs through some of the counties in the state of Colorado. So I would check maybe with those. And if those counties have any particular focus or trying to support real estate owners, then I think that might be the best approach, at least from this perspective.
Yeah. And there are definitely some counties that are providing relief around property tax payments and delays and those sorts of things. So there's probably a bunch of different things to explore there.
Okay, so I just wanted to mention that there are, since that's kind of a segue into this, there are many municipalities that are doing small grant and loan programs. This is in Boulder County, Erie and Lafayette. Boulder just closed, but sounds like Longmont and Louisville are probably planning one. So I would just encourage people to keep looking into that. If, there are new programs coming out, that Boulder one just kind of popped up and then there was maybe 2 weeks to apply. But, these things are coming up. There are bigger businesses that want to support. There's different municipalities that want to support. So things are changing constantly. We want to keep businesses open as much as we can. So it's really great that we're seeing some bigger companies and municipalities and that type of thing step up and help. So I know with Ulysses, they're keeping track of a lot of those things as well. So I would also encourage people to just keep checking back, make sure you're on top of things, and we're sharing as much as we can as fast as we can. So all of us are working together to get that stuff out there. So just wanted to bring that up. So this person is asking, they couldn't pay payroll last year because it was a hard year, but they're planning to do so this year. So is there a good way for them to try to get through this now, since they don't really have the history but are planning ahead?
From a paycheck protection program, it's hard because a lot of it's predicated on what you did the last 12 months, or if you weren't in business last year, then what you did in the first 2 months of this year. But if they were in business but just not choosing to pay payroll for whatever reason, they probably would find it hard to get much, if any, from paycheck. So the disaster loan might be a better option. I mean, we've only had 672 EIDL loans approved in Colorado before the funds ran out. But now the funds have been returned under this new act that hopefully the president will sign Thursday. That would be my suggestion, is to jump on that and try and get funding under that program. Again, other than the community or the local city type projects, opportunities.
So this person is asking for PPP loans. Is a record of wire transfer sufficient as proof of payroll?
Again, from the perspective of applying for the loan, there's a lot of onus on the business to have actually worked through that process. Hopefully, with a good accounting system or a CPA or their accountant or the bookkeeper. The verification really comes at the back end when we're looking at the forgiveness side, and the SBA still hasn't issued how you actually calculate that, but the Act provides the general guidelines. So again, 941s are really good evidence that you've got employees, but any documentation you have, every lender's a little bit different in what it's looking for up front. I would be just perfectly happy with a really detailed spreadsheet which showed what you spend each month on those different categories. But really at the back end is what you spend during those 8 weeks to maximize forgiveness will have to be compared with what are the comparison periods either last year or this year to try and really determine it. So documentation is pretty important, and whatever you can do is appropriate, and whatever you've got, if that's all you've got, then that will have to work. Hopefully. Again, 1099, it's going to just reiterate that if you're paying people 1099s or independent contractors, again, you cannot include them in your calculation of payroll for the perspective of coming up with your average payroll number.
And one thing to add to that is something that was updated on the 14th of this month that's on the Treasury's website states that if you did file a Schedule C, that's what's required to be used for a Schedule C for backup purposes. So just the information is changing so quickly, it's difficult to keep up with everything. And one other thing to add for Colorado Enterprise Fund, we're looking typically at the 941s. We're requesting federal form 940, Schedule 941 for all 4 quarters to back up to provide that, to confirm the payroll that is claimed by the businesses in general. And the wording of the Act for Payroll Protection Program puts the onus on the individual as a certifier. It removes a lot of the underwriting requirements of the lender. So lenders will be able to process these and have processed them theoretically much quicker. But all of us are trying to understand what the rules are, how we can comply with the Act. And I'd seen one list of backup documents from a different commercial bank, and they were much, much more detailed than anything Colorado Enterprise Fund would seek. They got down to the level of what is the compensation per employee, because under PPP rules, any cash compensation that exceeds $100,000 is excluded from the calculation calculating the payroll paid in 2019. But on the benefit side, that does not count. It's only cash, commissions, income, or cash that's counted as payroll.
Okay, so there's confusion for even just a lot of our clients about what is included for PPP, as far as do they need to have the same number of FTEs or the payroll total? Can you have less FTEs and pay them more to match the payroll total amount?
Good question, and again, the use of the proceeds of the Paycheck Protection loans are for things like payroll, rent, utilities, and interest. For in terms of maximizing your forgiveness, the Act talks about 3 different ways of looking at that. One is FTE, full-time equivalent. So if you had, again, 10 people during the comparison period last year or early this year, and during the 8 weeks that you have those funds, you get to an average of 10 employees again, then theoretically you've got 100% forgiveness. And that could be, instead of 10 full-time people, it could be 20 half-time people or 40 quarter-time people. It's up to you as to how you do that, and you don't have to bring back the same people. In terms of, there's also another section in the Act that says that if you're paying someone in the same position more than 25% less than you did before, if you bring someone back full-time and you pay them 3/4 of what you paid them prior to, then that would be, it's not helping the individual who is really the one intended to be helped through this process by providing you, the employer, with a forgivable loan. So that if you pay individual positions 25% or less, there might be some reduction in forgiveness. And then the Act also says that, however, if you get everything back to normal by June 30th, then there's no reduction in forgiveness. Again, at least 75% of the funds you spend during those 8-week period have to be related to payroll. But it's really, again, it's a good question, and we still don't have clarity around exactly what the SBA will want lenders to actually collect or to look at there. There's a bit of gray area in the Act because it requires the average number of full-time equivalents during the 8-week period. So if it takes you 2 weeks or 3 weeks or 4 weeks to bring people back, how does that impact your average number? So there is a little bit of uncertainty around there, and I think deliberately so from a legislative perspective. So we'll have to share with you, and I'm sure the SBDC will share with you as soon as some more strict guidance comes out. But to get the funds, it's relatively easy and defined. It's 1% money, it's 2 years, there's no payments of principal and interest for 6 months, so it's relatively cheap money. I anticipate that people may be able to get forgiveness on approximately 80% of what they borrow, but it's really, you should try for the 100% of the what you get, plus accrued interest, which can be forgiven as well. So it's actually a really good deal if you can plan it out, and this is why working with your financial advisor, working with the SBDC, working with your local partners to try and really make sure that you spend your funds wisely during those 8 weeks to maximize your forgiveness.
Okay, so people are also asking if it's okay to apply at multiple banks or institutions, since they're not sure when they might get processed. Is it okay to apply multiple places or not?
It probably is. If you're an institution, you get a bit annoyed, but you can only have one loan approved by the SBA. So if someone submits a second loan, then it will immediately reject, and it just might take a little bit of their time to get that, and they might be a little annoyed. But I've been encouraging people, if you're at the bottom of a queue of 20,000 people at one bank and the other bank only has 100 people, yeah, I would apply at multiple locations. But again, you want to maximize your time. It's not a complicated application, and it's fairly simple for the bank to process and to enter into the SBA system. But physically, if they do have tens of thousands of applications and they've only got so many employees, it just takes a little while to process all of that manually through the SBA system. But a good question. I would check with the banks and see where you are, and I would always try and go with someone that would be able to get the funds through a little faster.
Okay, so there's also concerns around employees will likely receive more in unemployment than they will if they bring them back on payroll in many circumstances. since they are getting an additional $600 a week through the new program. So do any of you have suggestions for bringing employees back in those situations?
I think my guidance as my undergraduate degree is in economics, and I'm very particular to different incentives and how employees respond to incentives. I've owned 2 companies in Colorado for over 12 years and have staff, so I'm familiar with that side as well as the hiring and layoff processes and whatnot. And the one thing that I would take a look at is that the program is going to end at the end of July, and at the end of July, when the additional $600 is no longer available, employees will need to be looking for something. So that's something I would introduce into the conversation. Yes, employee, you have the option to make more money if you decide to stay home on unemployment, but technically, if I have offered you employment, if I as a business owner have offered employment to a person, then technically they do not qualify for unemployment insurance benefit. And if one was not the nicest individual, one could call the state of Colorado and say, I offered employment to this person at their old job site, which should make them ineligible for continued unemployment benefits. So I see that as a bit Machiavellian, but that's the technical rule. So I'd encourage in the conversations I'd encourage you to be open with your employees that you want to bring them back. You're making changes to keep the economy going in the long run. And this is not, COVID is going to change a lot of things, but it's not going to stop us from doing business. One thing I wanted to share just as a success story, I spoke with my barber earlier this morning, and he owns his own barbershop with 2 locations in the Denver metro area. And I saw the changes that he put on his website, that they're trying to make changes per COVID. They're increasing their prices a little bit because instead of a 30-minute haircut, now it's a 45-minute haircut. They're taking steps A, B, and C to make sure things are clean and sanitary. They're requiring customers to wear masks. And what was beneficial was it discussed, we'll get through this. We're making changes. Here's how you will be safe. And our prices are going up, but they're going up because we're making things safer. So I thought that was an excellent message that was presented by that organization.
Great. So I think we answered the vast majority of the questions. I wanted to just update one more thing about the TechSource program. If you are interested in it, we do also help businesses in Boulder and along the Front Range. So just wanted to clarify that, and it is science and engineering firms. So again, anything that might be innovative, anything you're doing R&D on, we're happy to help you with that. So if any of our panelists want to have some final closing thoughts, I'd welcome that at this point.
Let me just say again, just to reiterate what Jason said, the Paycheck Protection Program is really a once-in-a-lifetime program. The ability to get a loan and then have most, if not all of it, forgiven, to bring people back and to rehire them, even if your business isn't quite open yet, is pretty amazing. So if you've got the opportunity to get one of those loans, explore it. And perhaps you have people volunteer, or perhaps you have them do other things in preparation for when you do get reopened again. But it's an amazing opportunity, and it unfortunately has a fairly short time cycle. So if you can, explore that, because it's just a great opportunity for your business. And you can do things for your employees that otherwise you might not be able to.
I would also encourage every business owner on this call to consider how you can make changes that will be beneficial to your business, how you can look at things in a different way. And probably our showcase company that we're working with right now is called Knotty Tie, and they have converted their operations from making high-end ties to making masks, making reusable masks. And they've been retained by the University of Colorado system to make 25,000 masks to be distributed at no cost to hospitals in rural areas throughout Colorado. That's what they're doing right now. Colorado Enterprise Fund is working with them to try to remove barriers to let them do things. But just to think, things will change drastically. The health club where I normally would exercise 6 days a week has been closed for a month and a half. The senior citizens who normally would frequent that location probably won't in the future, because they're at much higher risk by definition. Diabetes, obesity, those are folks who should exercise, but it'll all be different. And for everyone to consider how it will be different, how you can help the individuals and help your business by making the changes. It's such a different world. It's kind of hard. It can be overwhelming to think about that. So I'd encourage everybody just to take it step by step, make the small changes for one day, and give yourself some slack for not being able to bounce back immediately.
And I think for me, I'll just reiterate what Jason said right now. A lot of the clients that we have through the Minority Business Office, we've seen them do the same thing. They've changed their business model a little bit so that they could adapt to the times. There was a sunglass company that is now doing goggles. There is a promotions company that went from anything swag to now sourcing PPE materials for the state and other businesses here in the state of Colorado. So definitely looking at how you can pivot your business, adjust with the times, stay relevant, and to what I said earlier, just stay informed. There's a lot of resources out there. Make sure you connect with all of the different organizations that were mentioned here today with the Boulder SBDC, and you know, let's just stay positive. We're gonna make it through this. We just need to figure out how that's gonna look 6 months or a year down the road.
Susie?
I wasn't sure if you were going to wrap it up, Tammy, but we are exactly at 11:30, and just a huge, huge thank you to Mike and Jason and Ulysses for a great session and for all that you do. We really, really appreciate you taking the time, and the session is being recorded, and we'll share that along with some of the things we mentioned on the call today. And you know, everybody enjoy the nice weather while we have it.
Thank you.
Thank you.
Thanks all.